The 50-30-20 rule. Struggling to manage your paycheck? Use the 50-30-20 rule. 50% of your income goes to needs like rent and food. 30% is for wants, the things that make life fun. And the final 20%? That goes straight to savings or debt repayment. It's the simplest way to ensure you're living well today while building your empire for tomorrow. Pay yourself first. Most people pay everyone else first. The landlord, the bank, the coffee shop, and hope something is left over. It's a trap. Reverse the system. The moment your paycheck hits, the first move is to transfer a fixed amount to your savings. It doesn't matter if it's 5% or 20%. If you don't see it in your main account, you won't spend it. This is the foundation of true wealth. The power of compound interest. Albert Einstein called it the eighth wonder of the world. The core is simple. Your interest starts earning its own interest. In the short run, it's invisible. But after 10 or 20 years, the effect becomes explosive. Time is your greatest ally, even more important than the amount you invest. Start small today, and your future self will thank you for decades of financial freedom. Emergency fund. Financial literacy doesn't start with stocks. It starts with peace of mind. An emergency fund is a stash of cash that covers 3 to 6 months of expenses if you lose your job. It's not investment money. It's your shield. Without it, a car repair or a medical bill becomes a disaster that forces you into debt. Build your safety net first, and only then step into the market. Good debt versus bad debt. Not all debt is created equal. Bad debt is a loan for things that lose value. A new iPhone, a vacation, or clothes. It sucks money out of your pocket. Good debt is a tool that potentially increases your net worth, a low-interest mortgage, or a loan to scale a profitable business. The rule is simple. Never borrow to consume. Let debt work for you, not against you. Invest in what you understand. The worst strategy is buying an asset just because it's trending on social media. If you can't explain to a 5-year-old how that company or project makes money, don't invest. A single cent. Hype fades, but knowledge remains. Become an expert in one niche, whether it's real estate, index funds, or a specific tech sector. Deep understanding is your best filter against losses. The rule of 72. Want to know how fast your money will double? Use the rule of 72. Just divide 72 by your expected annual return. For example, at an 8% return, your capital will double in 9 years. This rule helps you quickly estimate the power of any investment in your head. Remember, even a small difference in percentage points changes the game over the long run. Diversification. Never put all your eggs in one basket. It's the golden rule of finance. Even the most reliable company can collapse. Spread your capital across different asset classes, countries, and currencies. When one sector falls, another might rise, shielding your portfolio from disaster. Diversification isn't a way to get rich quick. It's the only way to ensure you don't go broke in a single day. Inflation, the silent killer. Many think keeping cash under the mattress is safe. In reality, inflation silently steals your purchasing power every single day. What cost $100 10 years ago costs much more today. Your money must work and earn a return that at least outpaces inflation. Without investing, you are effectively becoming poorer every hour, even if the balance in your bank account stays the same. Hedonic adaptation. Have you noticed that as your income grows, your expenses magically rise to match it? That's hedonic adaptation. A new car or an expensive restaurant brings joy only for a short time before becoming the new normal. If you spend everything you earn, you stay poor no matter how many zeros are in your paycheck. The secret to wealth isn't how much you make, it's how much you keep. Assets versus liabilities. The main difference between the rich and the poor is what they buy. An asset is something that puts money in your pocket, stocks, rental real estate, or a business. A liability is something that takes money out, your personal car, clothes, or gadgets. Most people after 30 collect liabilities, thinking they are assets. Want to be financially free? Focus on buying assets first, so they can eventually pay for all your liabilities. The 24-hour rule. Marketers spend millions to make you buy on emotion. To avoid falling victim to impulsivity, implement the 24-hour rule. If you see something you desperately want to buy, wait exactly 1 day. 9 times out of 10, the urge will vanish by morning and the money stays in your wallet. This simple habit will save you thousands of dollars every year and keep your life free from unnecessary clutter. Invest in yourself. The highest yielding asset you will ever own is yourself. Markets can crash, currencies can devalue, but your skills and knowledge stay with you forever. Spend time and money on learning, new competencies, and your health. The higher your value in the marketplace, the greater your earning potential. A wise person understands. One book or one course can yield a return 100 times its cost. Taxes matter. Most people spend years trying to earn more, but not a single second trying to give away less. In the world of finance, it's not about how much hits your bank account. It's about how much stays there after the taxman leaves. After 30, taxes become your single largest expense, often surpassing rent, mortgage, or food. Ignoring tax-advantaged accounts, deductions, and credits is like trying to run a marathon with lead weights on your feet. You must study how retirement plans and long-term capital gains work in your specific region. Legal optimization isn't a trick. It's a fundamental duty for anyone serious about wealth. Every dollar saved on taxes and redirected into compound interest can grow into a fortune over 20 years. Stop working for the system more than the system requires you to. Financial independence fire. And finally, we reach the ultimate goal. Financial independence is not about yachts or gold watches. It's about the moment the word have to vanishes from your vocabulary forever. The FIRE movement, financial independence, retire early, has built a mathematical roadmap to freedom. The rule is simple. Once your invested capital reaches 25 times your annual expenses, you are officially free. From that day on, your assets generate enough profit to pay for your life indefinitely. This doesn't mean you stop working. It means you work because you want to. You can pursue art, raise your family, or change the world without ever asking a boss for permission. Reaching this point requires discipline today for absolute power over your time tomorrow. Remember, the most expensive thing you can ever buy with your money is the ability to never worry about it again. Your time is your only non-renewable resource. Start buying it back from fate today. These 15 rules aren't just theory. They are the foundation of a life free from financial fear. But knowledge without action is just noise. Right now, drop a comment below. Which one rule are you going to implement this week? I personally read your replies, and I'm ready to discuss them with you. If you found this deep dive helpful, hit that like button. It's the best way to support the channel. And make sure to subscribe, because in the next video, we're going to break down a topic that will help you crack the code of ultimate productivity. Remember, your wealth doesn't start in the bank. It starts in your mind. This is what. I'll see you in the next one.